Hello, this is Richard Posson. It's 4:10 p.m. Eastern Time, June 6, Thursday. The stock market's closed, and this is the daily chart of the Dow Jones Stock Index. And we're going to apply our cyclical model analysis to it. And what we've come to conclusion is you can see that there's an L3 cycle. This is a short-term inter-month cycle lasting a couple of days to a couple of weeks as far as trends are concerned. So we believe this little window reversal right here originally was a call for an L3 bottom. We revised that or reverted back to a previous bottom. Still believe we've got a top in place, and we think the trend is down, but is due to bottom now. We think it probably bottomed today. I'll probably draw a little window reversal right in there just to remind me of calling it. Now we do have the jobs report tomorrow, and that could disappoint the market and put it down for a couple of more days. And then it should rally. We at least should see a rally next week. But the longer it takes to rally, the less time to rally, therefore the less upside potential. And I think we're already running out of potential. I was hopeful for maybe a snap back all the way to 15,400 here. I think at best it's probably going to get up in the 15,100 to 15,200 area. And note this little trend line here. It's just a tentative trend line. It hasn't been proven, or not well enough in my opinion. And we do have some moving averages coming through here, 40-day average. We have another old trend line coming through here. And that kind of suggests it won't even strike 15,100. But the point is it should give us a pop, I think, from now into next week for an L3 top. Once that top's in place, the stock market should just trend right back down for another L3 bottom that probably will arrive no sooner than the week of June 17th. And that's the earliest for a more important bottom called an L2, an intermediate trend bottom. Now also notice the market fell below 40-day and 50-day averages, and by the close snapped back above them. That's pretty bullish. Okay, I like that action. It's awfully oversold, but when I see extremely oversold conditions, I get nervous. You're going to get a knee-jerk reaction, a dead cat bounce, and then it's just going down still further, but the indicator will not go as low as it once was, setting up a positive divergence technical action for greater odds for a bottom and perhaps for a more important bottom and more quality bottom. So I'm suspicious this extremely oversold condition is probably a sign there's still lower prices coming yet. We're not quite there. Okay, now let's zoom out with use of the weekly chart, and those L3 trends become little pops and drops every few weeks and build into larger L2, L1 trends the last 1 to 5 months, with the L2 the least important and shortest, but an L1 can be just as short at times. Here we have an L2, or actually we'll just go with the L1 trends. We have an L1 uptrend, then what's called a running correction. It just didn't work, but it's as if the market was held back into an L1 bottom, then sped up out of it, and that's generally what happens with running corrections and distorted cyclical trends. So we were trading this all the way up here, and we were looking for a top starting the first week of June. Looks like we missed the top by 1 week. At least by May 28th, I exited S&P futures from my fund, took a gain, and I warned followers, better lighten up. Whatever you were going to sell in June, you better sell at least some of it now in May, and then set stops below it and let it take you out if necessary. At any rate, my opinion, even though the market could snap back quite a bit for a last-minute L1 top and help us save face here, my guess is no, it's trending lower into an L2 bottom due June 17th to week of July 11th. It may yet trade down to 15,500s. It has gone low enough, however, for the price objective, for the minimum objective, so we could see some floundering around as well. But once we have this L2 bottom, my guess is it's going to trend higher into an L2 top and may yet pull back lower into September. But let's take it one step at a time. That L2 top could be much higher than I think. It could even be to a new record high. So let's just concentrate first on the idea of a continued downtrend here into an L2 bottom, some kind of rally for L2, some kind of pullback for L1, and then I think we're just going to see a renewed long-term bull market. Worst case downside scenarios around 5% to 10% now in the next few months here. But again, let's take it one step at a time and try to be bearish here going into this L2 bottom, and then we'll reevaluate. Thank you.